Hello and welcome to this week's edition of Invest Africa. I'm Kukuletu Mfupi. While South Africa's mother city of Cape Town recently played host to Africa's largest, most significant mining event, the African Mining Indaba, with a specific focus on capitalization and development of mining interests in Africa. Well, joining me to unpack all of this, I'm joined by my studio guests to discuss the investor sentiment after the African Mining Indaba, as well as the outlook of South Africa's mining industry. And we're joined by Vian who's with DuPont Global Mining Leader. He's the leader there. Rohitesh Dhawan, who's the Global Mining Leader for Climate Change and Sustainability Services at KPMG. And in our Cape Town studios, we're joined by Peter Major, Mining Consultant at KD's Corporate Solutions. Welcome, gentlemen. I see Vian is the only one that got the memo. So we in the red, you quite neutral today, Rohitesh. And in Cape Town, as you can tell, Peter's fairly casual. But on to the matter of the day, the Mining Indaba that recently took place in Cape Town. I want to get your sentiments on it. Lots of things were raised, but the key question is, did South Africa manage to sell itself? Vian, your sentiments?
Thank you very much, Gugu. I think so. South Africa, I think, remains the portal to mining and to business in Africa. And certainly hosting an event like this has positioned us well. We've also seen at this year's Mining Indaba that the conversation is starting to change. It's starting to shift. And starting to focus a lot more on practical solutions. Although we're still struggling with what they may be, away from the theoretical and conjecture around what we should do, specifically around sustainability in mining.
Rohitesh, your sentiments on the Mining Indaba?
I thought it was a fascinating discussion this year. You know, we've been attending it for the last 15 years, and this year was a record attendance of over 8,000 people. And I think it's reflective of the fact that despite its challenges, mining remains a critical sector, not just for South Africa, but for the continent. I couldn't help but reflect and think that every time I heard the conversation, it was about the challenges in South Africa and the opportunities in the rest of Africa. And that difference was really stark for me. So I think we've got a lot to work through in South Africa. As Vian says, I think the conversation has moved on. We're now starting to talk about solutions, which is very promising. But I'm really excited about the prospects in the rest of the continent, which really came to fore this year's events.
Well, I'm happy to hear these sentiments. Peter, I'm not too sure if you agree with both Vian and Rohitesh, but fairly positive note coming out of the Mining Indaba. Your thoughts on that?
Yeah, I'm glad to hear people talking positive. I heard a lot of negative connotations coming out down here. I didn't think any of them were justified, except maybe government could have been a little more forthcoming. Government could have been more proactive. But the numbers being over 8,000, that's fantastic news, because most metals are down somewhere between 20 and 50% from a year ago, and interest rates are starting to rise. So the fact that we can bring down 8,000 on top of last year's record 7,500, and I know there's at least another 8,000 that didn't even attend the Indaba that set up shop in the hotels. So on the whole, the Indaba went very well. It's just South Africa could have done so much more to made its star shine compared to the other 54 countries.
I'd like us to explore that note a little bit further, but maybe perhaps picking up on the government discussion. Many people, after the speech that was made by the Minister, Susan Shabangu, was saying that she painted an all too rosy picture, which was not realistic, of South Africa's mining industry. What were you hoping to hear out of Susan Shabangu's speech at the Indaba, Peter, that perhaps she didn't address in the speech that took place there?
Look, I thought that was her worst speech in, I think, the last 5 years. Ever since she's come down here, I think that was her worst speech. I don't know who wrote it. She barely used 25 minutes. They'd allocated her 50. And boy, when you're allocated 50 minutes to sell something, take advantage of it. This was South Africa's chance to sell itself. Now, Susan's come for about 5 years, so I didn't really expect to hear too much more, but I thought she would have made a bigger effort. I thought her speechwriter would have put more into it. She held a press conference afterwards that lasted about an hour. And I thought she came across pretty good in the press conference. A lot of very tough, pointed questions, and she answered them pretty well. But again, after 5 years, people understand that her answers are so far from what's transpiring, are so far from what's happening, and so much seems to be out of her control, that we all gave her credit for having nice answers, but it's time to start delivering.
Rohitesh, is this a concern for you? Peter says her worst speech, yes, she had a great presence, but still no certainty coming out from the government there.
I think as a general theme for me at the Indaba, we shied clear of having some of the difficult conversations. I think that's some of what Peter's reflecting is to move the industry forward. We're dealing with such difficult issues that unless we start to talk about some of those difficult conversations, I don't know if we'll move forward. So we tend to stick in the realm of the margin of the win-win solutions. But actually, if we're going to move the sector forward, we're going to have to take some win-lose solutions. And those are the conversations that I'd like to see. I mean, just reflecting on the role that the minister plays, she's in a really difficult situation. She's having to balance the needs of various different constituencies. It's a job I certainly would not like to have. But investors are desperate for some certainty. And that certainty perhaps was a bit lacking this year.
Certainty lacking, Vian?
I agree. I think, we're talking about the conversations that were there. And I think that at the backdrop of the expectations of communities out there it's high time that we start moving swiftly towards practical and implementable solutions. Because communities out there are still not seeing the benefits of the resources that's in the ground and that they have a legitimate right to. So the quicker we start moving to real tangible efforts on the ground that communities benefit from, the quicker we'll see sentiment change.
I take it the elephant in the room as well as the labour issue, both not any of your expertise, but I understand that we did have some labour representation there. Frans Maleni was there, but it does seem as though Labour, government and chief executives weren't sitting at the same table. Did you get that feeling, or are we still dispersed when it comes to that? Rohitesh?
My feeling was that we were sitting at the same table but talking at cross purposes. So I think we tend to talk past each other. So the discussion, for me, I would break it down into three questions between these groups of stakeholders. What is it that each stakeholder brings to the table? So what are they contributing? Secondly, what do they want out of the whole process? And third, and most importantly, what are they willing to give up? Because unless we have an honest, open and frank discussion on those three grounds, I can't see a way forward. And I find, when you compound this with a lack of trust, and there is a lack of trust in the sector between the different stakeholders, having that conversation starts to become really difficult. So I think there is a real void for a platform and a process in South Africa which brings the stakeholders together. We talk on a clear fact base that all of us agree on and all of us understand, and then we start to solve some of the problems that Vian's talking about and actually start to design some of those solutions collaboratively. But unless we have those hard discussions, I'm worried that we'll still be talking in a year and 2 years from now, and the sector will leave us behind.
One thing, Vian, you've got a point to add there.
We hosted a panel on sustainable development in the mining industry and asked the question, what do people believe are the biggest threat to their success in the next 5 years? And overwhelming majority of people felt that it was the expectations of both stakeholders as well as communities. So unless we address that, that's the elephant in the room. Yes, there's labor issues. Yes, there's government requiring transparency from industry. But unless we address what communities desperately need, we've got some more conflict on the way.
Peter, I'd like to come to you. Do you believe that this conversation is perhaps starting and this platform to address stakeholders' needs? Are we anywhere near addressing those key issues as mentioned by Vian?
I don't think we are. I think we're missing each other, two ships passing in the dark. And one myth I'd like to dispel is these ministers have a really tough time because they have to balance all these conflicting interests. And that's total pollywog. If you're Minister of the Mines, isn't your job to create mines, to allow mines to be created, to get men to work? And if you're Minister of Treasury, isn't your job to run a balanced budget, allocate the money correctly, and that'll keep the currency strong and it'll keep the country strong? And that's good for all parties. So I think it's a cop-out when these ministers say, oh, I'm trying to balance interests, that's why I couldn't get anything substantial accomplished.
What about mechanization, Peter? Some people view it as a threat or an opportunity. Is that something that could potentially solve stakeholders' issues?
Hey, if mechanization allowed the mines to reduce deaths and increase profits, they'd have done it forever ago. And they're doing it all the time. They're mechanizing. In fact, they're trying so hard to mechanize that half this mechanization that's put people out of work and has made the mine very unprofitable and has really weakened our currency because we have to import all this mechanization and all the talent. That shows you how hard they're trying to mechanize, that half of it they're just throwing money away.
I want to find out if my two studio guests agree with you. And Rohitesh, perhaps we can kick off with you. Is mechanization an answer or perhaps a threat, as alluded to by Peter?
So I think mechanization holds a lot of potential, and Peter makes some good points. I think it's a little bit more layered. So I think there's a couple of issues to consider. The first is mechanization inevitably brings jobs that are different to what the jobs currently in the sector are. Those jobs are probably more skilled and better paying, but there may be fewer of them. Now, as a country, are we willing to go down that route where we have fewer, better paying jobs? Or do we want to make sure that we have more jobs, which perhaps are less better paying and where productivity remains lower?
But why stick to doing things the same way in which we did 100 years ago, where people are still doing mining in a pick and shovel manner?
No, absolutely, you're right. So mechanization is good for the sector. I truly believe that. There are some trade-offs that we need to make, and we need to be going into this with our eyes open. There are some restrictions on how much we can mechanize, so the ore body dictates how much or how little we can mechanize. In areas where it's very difficult to mechanize, you will still need labor, and there are some safety issues. The northern limb is one good example in Rustenburg, and in platinum, that's mechanizable, and that holds great potential, but whether or not we're able to realize that is a different issue. So mechanization, I think, it holds a lot of potential. It's not perhaps as simple as some people will think it is. There are some challenges related to the ore body. There's some challenges related to what it means for the kinds of people that we employ and general employment in the sector. But I think it's certainly, for me, the future of the mining sector.
Vian, do you agree?
I agree. To be globally competitive, we will need to attack our cost base. We will need to look at ways of increasing productivity. But as Peter says, if we just throw good money after bad, that's not a solution. The other perspective here is that mechanization brings sophisticated industries together. So although big or highly intensive labor practices or labor intensive mines bring employment, so does investment in mechanization, because the industry, the support industry of the technology is wider. So it's broader community benefits more from increased in mechanization.
In one word, so does the mechanization result in better investment activity in South Africa?
If it attacks the cost base, if we become globally competitive with our costs, our production costs.
Well, definitely an interesting discussion, but we do have to go to a short ad break for now, but more on the investor sentiment after the African Mining Indaba with my studio guests when we return. Welcome back to Invest Africa. Now, do remember that we do value your suggestions and feedback, so please send us an email to investafrica@abn360.com or interact with us through Twitter using our Twitter handle @CNBC Africa, #InvestAfrica. Well, we're still on this hot debate regarding investor sentiment after the Mining Indaba that recently took place in Cape Town. And I'm joined with my studio guest, Vian Strydom, who's from DuPont Global Mining Leader, Rohitesh Dhawan, Global Mining Leader for Climate Change and Sustainability Services at KPMG, and Peter Major, who's a mining consultant at KD's Corporate Solutions. He joins us from our Cape Town studios. Well, just before the ad break, we were touching on the hot debate regarding mechanization, and some people believe that it works, some people believe that it isn't the answer, especially from a South African perspective. But the key that I think that relates to is M&A activity, and I know that that's not a strong point of yours, but is that something that we're looking forward to in the mining industry, where more companies will be pulling together to enhance their productivity levels, Vian?
I think you've hit the nail on the head there. I think collaboration is going to be key going forward, and the success of mining in Africa is going to depend on how well different stakeholders, different parties, different communities can pull together to provide a complete solution. Because I don't think that one party alone has the answer. As we see attention shift from the easy accessible ore bodies, and not only in South Africa but in Africa, it's going to require a collaboration at a very different scale.
You're touching not only on South Africa, but Africa as well, which I think is such a poignant point. And perhaps that's your forte there, Rohitesh, where we won't see just more M&A activity in the local sphere, but from a continental perspective.
Absolutely. So let's take stock of where we are. in the last few years, Africa has attracted about 11% of global M&A deals where the target asset is located in Africa. Now, when we as a continent sit on over a third of the world's mineral resources, that 11% is really underperforming where we should be. So I think the potential for mergers and acquisitions activity, which is reflective of a broader positive investment climate, is huge. And I think Africa will start to get its fair share. I think it's going to take some time before the M&A activity picks up again. So we are at our lowest levels since 2007 and 2009 when it comes to deal size and deal activity. So there's there isn't a lot of capital flowing at the moment. IPO markets have virtually dried up. The old model where junior companies were able to develop projects and then sell them onto big majors is no longer relevant. It's you don't find many of those deals going around. So it's a tough climate for investors to raise capital. I think it's going to get a little bit worse before it gets better. But I think then there will be a lot of flurry of activity. And the trick for us, which was for me one of the key takeaways from the Mining Indaba, is how do we as Africa prepare for the next commodity super cycle?
How do we?
I think there's a number of building blocks, and some of those have already been touched on. There's key things like the one for me, the most critical element is around infrastructure, because it's no longer just getting the stuff out of the ground. It's about being able to get it to port, get it to export markets. So the provision of infrastructure is one of the key building blocks for profiling ourselves and preparing ourselves for the next commodity supercycle. Skills, which is something that we touched on before, is also a key element. How do we ensure the right kinds of skills, especially if we're moving towards mechanization? That is a fundamentally different skills and education model than we've had previously. The third key element and the third key building block is regulatory certainty. So how do we provide investors with the right kind of certainty to bring their capital into Africa? These are the building blocks that will help us prepare for the next commodity supercycle.
Those are a lot of challenges that you listed there, but is this perhaps, Peter, to come to you, is this a realistic outlook that we should be expecting more M&A activity on the continent, never mind on a South African scale, when we can't even tackle our challenges here at home?
Look, there's going to be a lot more M&A activity on the continent. We have to decide, do we want to get a large percentage of that? Do we want to get all of it? Are we happy to not get any of it? And it's our choice. And I think the first thing we can do, Rohitesh mentioned some of it, our regulatory environment. It is so cumbersome, so unpredictable, so democratic, that makes it very difficult to even get a property that might be good just to explore. It's harder to get a prospecting permit than a mining right. Okay, that's on the regulatory environment. The other bit is government, unions, even management, and a lot of the financial institutions here, they seem to forget what investing is all about. Investing is about putting some money in a place where you get a higher return on that money than you get it anywhere else. And so many of these properties and projects that I've seen, the people who have them can't explain how you'll get a return. They can't explain what the chances of getting that return are. They definitely can't explain the timeline. There's way too many question marks, and government needs to know that as well. So a positive investment environment means you're pretty sure you're getting a competitive rate of return over a defined period.
Well, Peter, you'll be happy to note that both your colleagues in studio are nodding their heads in agreement with you. But then doesn't this highlight the fact once again that should South African mining companies even be considering M&A activity if we can't solve the basics?
No. No one will consider investing if we don't have the basics in place. They should be fired or locked up if they do.
Peter, definitely shooting from the hip there, but Vian, do you agree with what Peter's sentiments are regarding the challenges to M&A activity on the rest of the continent?
I do. I think we also have the opportunity at the start of these projects to be able to build sustainability into the life cycle of the project, because we've seen that's when it's most successful, when we deploy our capital in such a way that we also think about the end state of these operations, because they remain extractive. They have a finite end, and the legacy that we leave behind is going to be dependent on us planning throughout the life cycle, whether it's super cycle or whether it's in hard times like we're going through now. Plan our social plans, our sustainability plans, the same way as we plan our capital investment and our operational plans.
Gugu, for me, one of the greatest indications of how the mood has changed in the last few years, in specific relation to M&A activities, if you reflect back towards the late 2000s, you had a number of these major deals happening. And over the last couple of years, you've seen some of those deals unbundle and the write-downs on those deals, which have led to the change in the guard of some of the leadership in the mining companies and the new leaders that have taken over. And the culture of leadership now is one where issues of performance, issues of cost, issues of operational excellence are coming to the fore. And that's where Peter says we need to get our house in order before it becomes an attractive asset. So these issues of cost and performance and operational excellence are really top of mind for mining executives at the moment. It's not about these mega deals. That time has gone, it'll come again, but for now we need to get our house in order.
Do you believe we're holding them accountable?
The leaders of the mining companies? I think so. I think I've seen certainly the executives of mining companies talk a language that really inspires me. I think we're starting to talk about creating shared value. I think we're starting to talk about a prosperous mining industry that benefits all stakeholders. And I think that we're going to start to find some of those solutions now that we have the right leadership and now that we have the right messaging from those leadership. It makes your life a lot easier when you have the buy-in from the right people. And I think there is a recognition that for mining to be truly sustainable, as Vian talks about, it needs to benefit everyone. And I see that coming through.
Sure. It needs to benefit, and that's such a poignant point that you make there, but all of this doesn't happen without capital. To get the M&A activity going or to start up that mining company, are we seeing more flows coming to the continent or South Africa specifically?
So I think we're seeing a change in flows. Now, I had a very interesting experience lately where I was made aware of Canadian junior miners coming to South Africa to look for private capital. Now, that's a real reversal of what we would expect a few years ago, where South Africans were looking at Canada for capital to fund their projects. So there's changes happening in the sector that may perhaps seem counterintuitive. And for me, the entry of private equity and the entry of captive investment funds into mining is one of those big changes. I think it's really changing the nature in which people get funding for their projects. Juniors are having a very difficult time to get funding for their projects, and the IPO market has virtually dried up. So I think private equity and captive investment funds are going to play a bigger role than we've seen them in the past.
Peter, you're from the US. You know what trends are taking place internationally, and perhaps like the US's neighbor in Canada, are private equity flows the best option for African miners at the moment?
They probably are, because we've got very large banks. They're very happy to loan to blue chip projects, but they're not venture capital. They're debt, and so they're good for existing operations, well-known operations, but to sponsor new operations, then you need venture capital, private equity money. And that's quite a small sector in this country compared to the West that's had hundreds of years to build up billions and billions of private equity that knows how to do it and has done it and is comfortable with it. That's why we have to be extra special competing for that capital. When we had mining houses here for 80, 90 years, they had good relations with the banks. They funded all the mining projects easily. But now that we've broken up the mining houses, you've got all these little individual projects. It's a gap that only the private equity can fill.
Vian, I'm not too sure if you agree with these sentiments or have a different view.
Well, I'm not qualified to talk about investment strategies and money flows. That's way beyond what I can talk about. But what I do want to say is that the scorecards for investments should reflect the complete picture. So what we've seen at DuPont in our own operations is that communities are becoming a lot more savvy around what is required, and their expectations are rising continually. So for us, it's very important to take that into account and build that into our plans. Managing investor as well as stakeholder sentiment and expectation for us is a competitive advantage in our own facilities.
A key competitive advantage that you make note of, but again, that probably takes us back to our key question for today: is investor sentiment after the Mining Indaba. Are we slightly more positive? Are we slightly more negative? Are we at the turn of a tide? Your final thoughts on this, Vian?
Well, I can't talk for investors, but certainly the sentiment at the Mining Indaba, we're very excited about. There was a number of panels and a number of sessions around sustainability, and I think, putting aside regulatory stability as well as community expectations and the economics of the question, bringing all three of those together is going to be the solution and moving us forward. So I would expect and I'm no economist, but I would expect that there's a much more positive outlook on mining in Africa,
Well,
if we can sort out some of the challenges that
the
we have.
key issues. Well, certainly your glass is half full, not half empty. Peter, judging by your sentiments shared earlier on today, we're not too sure where you stand, but your view on mining going forward from the African perspective.
Look, the Indaba does more to make the environment for investing in Africa rosier and better. But government, the unions, the strikes, they tended to put a down tone on it. And we didn't hear anything new from Susan Shabonga. It was her 5th try. It was actually one of her worst speeches. So I think the net result was people are a little less keen to come into South Africa than they were a year ago. But it won't take much. It'll take almost nothing to turn that around. But government and the unions have to decide, we want to turn it around and we'll do what it takes.
Well, thank you so much to all my guests. Rohitesh, we know that you're fairly optimistic about the view on mining going forward. Thank you to all my guests, Vian Stradum from DuPont, Peter Major from Katie's Corporate Solutions, as well as Rohitesh Dhawan, who is from KPMG. Well, that does bring an end to today's episode of Invest Africa. Bruce Woodfield is up next as he unpacks the latest news from South Africa's economy on Tonight with Bruce. But until next time, it's goodbye and thank you for joining us.